Welcome back, everybody, to the Investors Roundtable. This is episode 15. Kind of 15 episodes. It's pretty amazing. And I'm just very excited for our panel that we have today to discuss a very interesting topic that could either go a half hour or less or for 4 hours. But with that, I'd like to introduce our panel for today, starting with Mr. Reliable, Stephen Kiel. Not only every week, but also shows up at 6:59, or no, 5 minutes early. Excuse me. But Stephen from Arquitos Capital, always great to have you.
Thankfully, I'm on the East Coast, so my time's a little bit different here, but still great to join us. Looking forward to the conversation.
Thanks, Stephen. We also have joining us at The Good Prick on Twitter. Remember, we're still trying to get his Twitter count up, so please help us in that regard. We got Kevin Shea, full-time MicroCap investor. What's up, Kevin? How's it going?
Good. Great. Good to be back.
Great to have you. And also joining us after a few weeks away, we're excited to have him back. It's Kelvin Seetoh from Slingshot Capital. Kelvin, tell us, what time is it there? You know, we're talking about punctuality. You know, it's in the middle of the night in Singapore, right?
It's 10 p.m. It's wide awake.
Not too late.
We have a nightlife over here.
Well, when we were doing the recordings a little later in the afternoon, that's when it was in the middle of the night.
Oh,
yeah, you remember that?
Yeah.
All right, guys. Well, today's topic, it's a loaded topic. You know, really, what we're talking about today is what sectors and industries are uniquely positioned to have high TAM, that's total addressable market, and ability to grow revenues, GPM and OPM faster with increasing cash flows, and vice versa, and why. So, in a nutshell, what we really want to kind of try and cover today is a discussion on sectors and industries that we think are burgeoning and suffering, and why. And so with that, who wants to take the first stab? You know, I'm, you know, who wants to go? Steven, you might as well, right?
Yeah. You know, I think to start off, the one thing you want to look at, right, for this is, look, we're in a very unique environment, and we don't know how long this uncertainty, forget about the stock market itself, but the economy as a whole, we don't know how long this will last. So I think we need to differentiate between some of the short-term things that are really benefiting industries and companies that are really benefiting right now during this uncertainty, and those that actually have the ability to sustain that after the fact. And so an obvious one that you can think of is, well, some of the online purchasing, whether it's, you know, you have the kind of retail as a whole, more like apparel and things like that, which clearly are having some trouble, those who don't have the online presence. But then, you know, on the left side, even consumer staples, you know, whether it's something like an Amazon or Walmart or a Kroger, Costco, things like this, you know, it's worthwhile to look at those who have an online presence that will continue to grow or have the ability to expand and grow and find new areas over the long term versus those who might have a short-term advantage, but will go back to some sort of normalization afterwards. And then, you know, so you have the industries there, but then you also look at specific companies in it. And Costco is a good example. Clearly, they don't have the online presence that some of these other companies do, but they've seemed to have benefited, right, during this time period. And the question is, will they continue to have elevated demand for the products once we get back into a more normalized economy?
I would even argue Costco's online presence has gotten better. I mean, I know from just personal experience. I mean, we've ordered, you know, especially when the pandemic first hit, you know, not just, you know, for the Clorox wipes and all that stuff. Like, you're looking for everything, you know,
yeah.
and because if they don't have it in store, you just order it online, or you can see what stores have it and whatnot. So, you know, even within those consumer, those consumer staples, it's building that online presence out even more.
Right. And who will they be crowding out? Right. So if they can expand their online presence and capabilities, and people start to think about, you know, look, 2 years ago, people generally, 1 year ago, you know, you didn't go to Costco online, you go in person and you deal with all of that. And so here's a great example of a specific company that is using this uncertainty and crisis to thrive, you know, to really take advantage of these opportunities. And so when we get back to a normalization, they're going to be better off than they otherwise would have been. And I think that's what we want to think about and talk about here on today's show. And that's what's exciting as investors to look at, because, we're looking at things where we might have a little bit of a different view than the stock market itself may have.
Absolutely. Kevin, you want to jump in?
Not really quite sure I agree. I understand, but I don't know if I agree. And again, I go back to this whole thing that we started on, I think it was session 1, where, and Steve made note of it, is uncertainty. And I think the thing that was mentioned back then was that there's going to be a COVID premium and a COVID discount. And I still agree with that. And I do agree with Stephen with regard to, we don't know whether this is going to be short-lived, how long it's going to last, et cetera, with regard to people's sentiment with regard to either moving online or going back to a store. I think when you get right down to it, people are still social animals. They want to be out, they want to go out, they want to be able to exchange with others. And I don't think they want to be hiding in their homes doing online buying all the time. Although I think it's appropriate, I just don't know whether or not the quote unquote new normal, I don't know what the new normal is. It hasn't played out yet. But I think what you get into is that you do get into people want to go back to their general selves, that they've experienced over the last 50 years. I don't think that's going to change much. So, the other thing I've been noticing also, just on the personal level, is people have been accepting this whole idea of putting a mask on. I mean, it's not even a question anymore. You put a mask on, you're going to buy some stuff, okay? And I think that's become normalized in itself. And people saying, instead of being all pissed off about putting the mask on, people are now saying, oh, okay, going in. And it's become pretty normal, okay? People want to go out. People want to exchange with people. And they want to be able to enjoy the benefits of social exchange. So I think that's one thing, when you get right down to it, is that the pandemic, to me, is just another bump in the road and along the long road of investing. I'll go back in to sit down and say, you asked the question, what are the things that one looks for from an investor perspective? With regard to total available markets and all, and what grows and what's big and what's going to be the best. The one thing that I came down to is that the number that I hit, and I would sit down and say, Kelvin might very well notice this as well, but I would sit down and say, first of all, be global. Okay, you have to be global. If you really want to get a big total, TAM, and you want to have an opportunity to get really, really big, really, really fast, I think global is a fairly definitive first step. If you only have a selected market, the United States or the Corn Belt of the United States or something that's very isolated, I don't think you're going to have a very robust opportunity of being able to sell into a very, very high TAM. So I think that's number one, okay? And then if you look at global from my perspective, and you start looking at what industries are global and what can be global, of course, there are many, many of these very, very large companies that we are dealing with right now who have established a huge international environment. But it's kind of funny. There's one thing I just came across just recently, and it was based upon some of the presentations that were made at the MicroCapClub. I'll just give you one example. KidVid, okay? Children's videos, okay? Children's videos are made everywhere, okay? They're made in China, they're made in India, they're made in Japan. And what they've done is that they've globalized them by not having a lot of voicing going on, a lot of voiceover. So it's kind of, to me, it's kind of interesting is that kids are everywhere, and kids buy stuff pretty much, accordingly. So people who are engaged in international KidVid might very well be, something that I'm looking. I just mentioned it because it's basically something that I just came across. But again, so many of the opportunities for biologics, big pharma, obviously those things are going to be out there in that environment globally. And medical devices the same way. I think that you can start getting down to, I can start listing a number of different things that I think that are interesting to a microcap investor. When you start to sit down and engage it against, I'm only giving you one criteria, and I'm sure that there's going to be many, many more. So I'll just turn it over to Kelvin, see what he has to say.
Yep. So I think those are interesting points from Stephen and Kevin. The way I look at it is that before I guess we jump into the industries, right? We first have to look at what actually causes um, certain industries to have high total addressable markets, right? And I feel that even if today when there are a lot of uncertainty, but I always ask myself today, it goes back to the question, right? What are the products and services that deliver value to the customers, right? And I think value is very different for a lot of people. Like, I mean, back then in maybe I guess in America, there are a lot of department stores that were doing tremendously well. But then you realize that Amazon came out with a better offering, the one-day Prime kind of delivery, a better way to purchase stuff on e-commerce websites. So I always ask myself this question, right? Like, what is the value that has been constantly been changed and is changing even right now? So like for example, right, if you ask me this question, right, there's this software company that that is called CrowdStrike, right? I mean, you look at the cybersecurity industry is actually growing quite rapidly. Like if you are using McAfee, right, there's an antivirus software. When you try to load up the website, try to load up the apps, right, it kind of like hangs your computer and you have to wait up like 1 minute for it to even load, for it to start using. But CrowdStrike is a lightweight app that runs in the background, so that actually delivers more value, and it's a cloud native process, right? So actually it's much better. So at the end of the day, I think there's two ways to look at it, but I think the direction that I'm looking at from are companies that actually eliminate constraint, right? Constraint meaning like the load up times, or can help me eliminate costs as well, or boost my revenue, or boost my productivity. As long as you have a business that is able to eliminate constraint, eliminate costs, boost your revenue, or increase your productivity, I believe they will still continue to enjoy a high total addressable markets. Maybe just an example here, right? I think there are still a lot of businesses that still really haven't gotten used to like CRMs as well, like customer relationship management softwares. But I also realized that you see, whenever I buy into an industry that I want to really bet big on, right? Like have a big position on, I believe that it has to serve a very wide industry, right? Like one of it is the huge consumer markets. Software is actually one of it, right? Like if you ask me, would I want to buy a yacht company, a golf company? Actually, my answer would be obviously no, because the addressable market is really, really small. But I start to see that consumers' habits are really changed, right? Like in the past, if you look at a lot of office, I think we still remember the days where you go to a server room and there's like a lot of wires, a lot of dials, and there's a room that you never ever want to go to. But today, we don't have any more servers because it's all stored in like AWS. It's all stored in a lot of Azure or Google Cloud. So from that angle, I'm actually starting to see that actually we are still at the age of how computing is being changed, computing services being delivered. So one of the industry that I think will have a very huge TAM going forward is software. That's number one. But I also believe that what has changed from my point of view, especially in Singapore, where I started to see a lot of retail shops being closed down. And previously, it used to be the idea that, hey, if you own a prime spot in a prime shopping mall in Singapore, your sales tend to do really, really well. But I think now it's starting to prove one point is that, the strength does not lies with the brand anymore, but it lies with the consumer marketplace like Amazon, in Singapore case, Shopee and Lazada. These are the ones that I believe would have greater power. I think the power has shifted to platforms instead of the brand owners as well, because they are the ones that bring traffic. So I guess these are some of my quick thoughts on the topic.
Yeah, that comment you referenced Shopee, and I think when you think about a platform, right? Whether it's Shopify in the US or Shopify, Etsy, something like that, people generally are looking for more personalization. I think that will continue and increase going forward. And so, to control that platform helps to eliminate some of the competition, because ultimately when you have an industry with a large total addressable market, that encourages competition. And as investors, we actually want a company that generally is a monopoly or duopoly or something like that. And so what you can find then is in some of these platforms, they just crowd out the competition, right? Once you have, all of that connectivity with it. And so, forget about stock prices related to these companies, but when you think about long-term success, I think you really want a leader in a one of the platforms that is a leader, or at least one or two, because sometimes the industry can support a couple here. That's what I would look at. Shopee is a good example here. Obviously, Amazon in some ways, I mean, Amazon sells itself, but they also have a platform with the third-party sellers. Shopify does it. Etsy to a lesser degree as well. That's what I would be looking at as increasing going forward. And then obviously these are online sellers, which, I think this time period has reset interest in buying more online for some. It's increased the TAM because you have some people who were really not generally online shoppers before who will be more in the future. I'm talking about, people in smaller cities, some older people, things like that.
I would. Oh, sorry.
I wanted. Yeah. So Stephen, I think that's excellent points over there. And I think as you're speaking, I start to have this realization, right? Like, how do we actually, where do we start to hunt, right? Like, I start to realize that when we start to see certain consumer behaviors start to change, the way we act, the way we interact start to change, from the traditional forms, right? And there's this book called The Value Migration, right? Value migrated from a newspaper to Facebook because there's a better way of interaction. And also, in this case, Zoom actually took over WebEx and a lot of other communication tools, right? So I think one of the way whereby, we see sectors and industries that are uniquely positioned, I feel that is where they are ripe for disruption. One of the areas as well, of course, like I heard a lot about Square, I heard a lot about a Cash app. I have not really personally, used the app before, but I think it's really highly disruptive. So again, I think it goes back to the idea about, there's this term that I heard before, but I didn't know whether it's relevant to this topic. It's called the tectonic shifts, right? Like, what are the shifts that's happening right now in the industries, right? The way how people consume, the way people watch movies as well, right? Sometimes maybe we do not want to go to cinemas because we think that Netflix is a better option for some people. I'm not sure, right? And so when I start to see huge changes occurring in the industry, that's actually a good thing, right? Like electric cars. But I think the second question is where who is going to be well positioned to win, because when the whole value is being migrated to the new industry, there's a huge addressable market. Everyone wants a pie of it, but how do you dominate and how do you win, right? So I guess that's the next question that I'll be thinking about.
Let me just jump in also. I agree 100% with Stephen with regard to the idea of platforms. I think strategically, platforms have become the standard bearer for future success. Anybody who's moving from an isolation cell to a platform cell, I think is going to have a significant benefit in regard to anything in the competition. I think the same thing is true. I look over and sit down and say, a platform provides the means of being able to have anybody sell content. Shopify or Amazon, of course, is the 500-pound gorilla. But I think that is a strategic direction that could be built, that can be used to build a company. With regard to how big it can be built, from a total available market, I don't know. Similarly, I would sit down and say the strategies that companies that implement strategies that follow trends. And I think that a platform is a trend. There are other ones that are going on as well, and I've been saying this for a while. What I see is that companies who move to systems rather than selling, let's call it just parts. Companies who move to integration, where they are assembling and putting together items that are now packaged into a system, are going to have a benefit. Well, one company I just listened to recently, it's called LightPath, LPTH, which I do not own. I listened to the new CEO, and what I came to the conclusion with was that the guy basically recognized that although the company makes great components, his new strategy is going to basically be being able to sell systems and subsystems. He's moving up the value chain. So to some extent, when you look at future opportunities, I think there are substantial existential movements that are going on in the broader markets that one has to basically sit down and see whether or not my current strategy is consistent with the movement to these new strategies. And I think Kelvin said the same thing when he's talking about value migration. I think his argument is basically along the same way. He's looking for new opportunities to sit down and see how are things changing strategically. So again, if you can identify early on that you are on a new strategy or be the owner of the new strategy. I don't know who owns platforms, but it probably is Amazon. But if you can launch onto a new change, a change in the overall marketplace, I think that's going to give you a benefit. Now, again, if you create a great strategy with a great platform, but your market's small, again, we're talking about total available markets and things of that type. How big can you get? Again, you have to kind of consider that entire thing when you're doing your due diligence. Great opportunity, great market, great strategy, small market. Where does that put you?
Well, if you're a monopoly, that's an excellent point. That if you're a niche and the market's so small that it's not going to invite real competition, then as an investor, that could be a good place to be. For the business itself, obviously, there's a cap to what they can do. But I do like that idea as an investor to look at, you want to have massive TAM, right, in the early stages, or relatively a small amount of total addressable market, but one company that's just dominating it and does not appear to be, to be able to give it up in the near future. That could be an attractive investment as a stock market investor as well.
Yeah, but being able to identify that early, I'm going to be the monopoly in this business. I
don't think early. Yeah, I think you got to take out the word early there. That's,
yeah. I think you become the monopoly because you're so unique and nobody else is, I'm not going to share the market with you, things of that type. As I said, it's kind of funny. There's a sentiment out there. I'd rather be first than second. In some cases, I'd rather be second than first. I'm looking at Juul, for example, right now. I'm not investing in Juul. I'm just looking at them. They were first in the vaping business. They completely screwed it up, okay, by being arrogant as all hell. They could have monopolized it for sure, okay? But now they're in a situation where they spent a ton of money, they did everything right, then they did everything badly. And anybody who comes in as a second, okay, you thought that Juul could be monopoly on the vaping business, and now it's wide open. So I think what you get into it is that it's nice to be first, but sometimes being first, you end up with the arrows in the back.
Yeah, but you need, in a situation like that, I think you need some sort of patent advantage, or you need to be, you're collecting tolls on that bridge going into Canada or something like that. And again, the total addressable market, relatively small, but you have some sort of moat or protective barrier around the business that is more than just brand name. It's something like a patent advantage or something else. And again, that expires at some point also.
Yeah, the interesting thing about Juul, I think they had a massive moat to begin with. And I've written about this. I think moats are indefensible in the long run. And you can defend it by patent. You can defend it by being very, very good. But you can't defend it by being stupid. And I think that's what Juul did. And it's quite apparent that they lost their way because of poor management and poor decision makings, and getting up too tight against the regulatory people, the Fed doing the regulatory activities and things of that type. So I think that's kind of interesting, from the standpoint of monopoly and moats and things of that type. But again, I guess I'm not an anti-moat guy, but I think that moats are very, very difficult, particularly if it's technology driven. And I do agree with one thing that was mentioned a while ago, is that I think that there is quite a bit of opportunity to develop moats through culture and corporate culture. That was explained, that was discussed 4 or 5 sessions ago as well. So yeah, it'd be nice to know who the monopoly is going to be from the very beginning.
Oh, wouldn't that be just the dream for all of us as investors? Well,
I'd like to add a very quick example. I think what Stephen and Kelvin had in the discussion was very interesting, because previously I was owning this company called PaySign. Some of you guys may be quite aware of that. So of course, you look at the plasma industry, it's small, right? And but it's growing quite steadily for 10% kind of like CAGR for the last decade or so, right? So what I think that we can make a kind of maybe a differentiating point here is that, it can be a small industry, but it's growing at 5-10%. It will not attract any competitors. That's good. And most of the time, these industries are, is managed by one player, and that player has absolute monopoly. And when you have a monopoly, you'll be complacent, right? So Wirecard became complacent. PaySign came into the business, took a lot of business away from Wirecard. And I think the idea where culture is a mode, I absolutely agree with that. To be really honest, I don't really see any huge difference between PaySign's solution with versus Wirecard solution in the plasma processing environment, but they just had better customer service. When you are just going against a huge and complacent player, you can just win by customer service. And at the end of the day, why are they complacent? Because Wirecard has so many businesses, right? And that plasma business is just a small portion of their overall group's revenue. So I think when we want to choose businesses to invest in, there are small industries, right? We got to look at who's the leader and whether they're complacent. But if this is their main business, right, it's going to be their bread and butter. Of course, they're going to compete quite aggressively. Then I think with a second player coming in, then that may not move the needle, and I think the dominant player will still continue to dominate.
Yeah, I let me throw out a question. I'd be interested from each of you in the idea of trying to find a 101 bagger. That's what I'm going to patent, not a 100 bagger, since John or Chris Mayer's got that 101 bagger, and 1,000's too much. I mean, let's be reasonable. Be happy with 101.
6-minute abs.
Yes. People who recognize that, that's what we're going for here. But here's the question: what is a company, public or private, that has, what is your opinion, the largest total addressable market? They may not be taking advantage of it right now, but give me a company that has the largest total addressable market.
Well, the largest total addressable markets are companies who are already very well established. I mean, cigarette companies, automobile companies, products that actually are distributed broadly and widely and I don't know, are ubiquitous in across societies, and that's the first thing that comes to mind. I don't know if that answers the question or not, but
well, I've got it. I've got the company, so I'm sure I'm right, but I'll give it to Kelvin.
Oh well, it's a very good question. It caused me to think quite a little bit as well. So in my mind, there's two things, right? One is that your B2B business, is that a big addressable market, or is it a B2C? I don't have any research to back it, but I still think that the B2C business still remains one of the largest. And to the point, I think early on we talked about platforms as well. I think that the unique thing about platforms is that once you dominate into one category, and for you to expand to another category, another vertical, it's relatively easy. And I've seen Amazon done it. I've seen Alibaba done it as well. So there's a reason today, I'm still I have a big position in C Group. I do think that the Southeast Asia is still going to be a very, very big market, and a lot of them are still not using internet. So there's a lot of value migration from like offline to online. But yes, I want to know the company.
Bobby, you want to take a crack?
The first thing that came to my mind was just from an industry perspective, not necessarily an individual company, but just, gaming. I just think gaming as a whole sector is in the early innings, as there's new games, as there's more electronics coming online that allow you to game in any way, shape, and form. And, the creativity out there for new games, and, and within gaming, I'm including sports betting too, just being able to do all of that right there from the palm of your hand. I mean, it just, and also really it hits on Kevin's main point that he said at the beginning of this conversation, is that it has the ability to be global. I mean, it's already global, but to really continue to expand globally, especially as some of these fiber optic networks are getting better in some areas that maybe the internet connectivity wasn't as great. So that was the first thing that came to my mind.
Yeah, let me jump in and try to see if I can connect pieces. Given what Bobby was saying, is there's 3 or 4 pieces that run through my mind. One is that currently the gaming business, the Las Vegas business, if you want, the Macau business, of course, are indeed suffering, along with all hospitality and the like. And it does, I think, connect to Stephen's early opinion about online activities might very well become an outshoot of the problems that have been encountered in hospitality. So I can link those things together with onlining and things of that type. But, you know, again, you asked the question of what companies are suffering. Of course, hospitality, restaurants, and those are the easy ones that are you know, just sticking right in the middle of the face. Will Las Vegas change? To me, people want to go to Las Vegas. You know, people want to go to Macau. So again, I'm not quite sure whether or not this is along the lines of what Stephen is thinking about, but you know, it's kind of one of those things that's online now, but when planes are running again, what are they going to see? Online gaming in an airplane?
You know, well, I was thinking more towards, you know, the idea of not just being able to go global online, but also the combination of a platform. You know, with gaming, I feel like it's uniquely positioned where you can get some of these companies out there that now, you know, whether it's through acquisition or, you know, they build up their own platform themselves, where now they have aspects of, they're fully vertical across all the different gaming things that are out there, for lack of a better term.
All great comments.
Let me take a stretch and then give it back to Stephen.
Okay, all right.
So the question that you're asking is kind of simple, Bobby. It's one of those things where let's just stretch it a little bit. Is MGM or is, you know, are one of the big, you know, Las Vegas companies or whomever, are they currently investigating or are they currently developing any sort of platform, use that phrase again, which will permit them to become more global, okay, minimize the walk-ins, maximize the gains, the gains because of losses that other people have. So do you think that these people are actually thinking along these lines, or are they just waiting for people to walk back in the door? And I'll cede back to Stephen. Go ahead and let him tell us.
I have a good comment to that too, Kevin. Dang.
What?
All right. Let's let Stephen drop the
No,
ball.
I just wanted to poke. I'm a great comments all, but I'm going to poke a hole in each one of them here. So
awesome. Good.
First of all, Kevin, have you ever bought anything off Shopee?
Me?
I don't even know what Shopee is.
Kevin. Exactly. Okay. Okay. Have you ever smoked a Juul?
How old I am. I don't know this stupid stuff.
So Shopee is a subsidiary from C Limited. It's an Asian platform based, you know, it's a couple different things, but Shopee is kind of the Amazon in some ways in Asia. So Kevin is not part of the TAM of C Limited right now. Kelvin, have you ever smoked a Juul?
Sorry?
Have you ever smoked a Juul?
Oh, no.
No. Okay. So Kelvin is not part of the TAM, right? Of kind of, it's like, say, tobacco use, whether electronic or otherwise.
Steve, you didn't ask me.
I'm coming.
Oh, okay.
Bobby, have you ever done online gaming?
Well, are you talking about video games or placing a bet online? See, when I meant gaming, I meant literally video games.
Yeah, gambling.
The whole
Yeah, forget about gambling because, you know, I'm sure we've all at least discussed that. We're all part of the TAM probably.
Wait, does online poker count?
But let's go back to, yeah, online poker I think counts. So you're kind of part of that, right? But what were some of the other things we get? You know, Kelvin, with related, I mean, I think C is a good example because it is a platform here, but there's still aspects of it that do not cover, you know, each of us. Maybe whether it's geographic, whether it's kind of interest. My guess is Kevin probably does not kind of play online games through the C platform and things like that. My point though is then when you look at an industry that has the largest TAM, you have to touch every aspect. And I guarantee every one of us and everyone listening here in some way has done a financial transaction that Stripe has affected. And so my answer here is Stripe it probably has the largest TAM out of any public or private company right now. And, you know, 20 years ago, it was like a MasterCard, a Visa, or something like that. But Stripe is so international, and whether they're approaching, you know, those types of companies or not, they will surpass at some point because they potentially could have their hand in every transaction that almost everyone on earth could have daily interaction, unknown to them, of course, but daily interaction with Stripe. So I'm a value investor, but I'll tell you, when Stripe goes public, I'm going to buy some shares and I'm never going to sell them.
I'll tell you, Steven, that was my second choice of your question was it was fintech financial services in general, because, you think about TAM and you think about, all right, how many potential people does this actually hit? When I would argue that almost, a good amount of everybody in the world has gone to a bank, has a bank account.
What's a bank?
Yeah, right. Or
you
does
yours
it online.
Under a mattress? Yeah. Kevin's got all his cash under the mattress, right?
Yeah, all of it. 37 cents.
But yeah. Sorry, Kelvin.
Actually, Steven, yeah, I think you hit a bullseye, right? Stripe is something I'm very excited about. Yesterday I was speaking to a friend of mine who was in Stripe as well. It's very exciting. I think definitely, within a few years there's IPO. And also I think to Steven's point, right? Like actually you look at a similar company called Adyen, right? It's also a payment processing company, right? You look at the way it's being valued, right? And look at the growth rates, right? It seems like you kind of like projecting sky high valuations, but obviously that there are reasons for that, right? Because what they do could be international, that's number one. And number two as well, right? The way they earn their fees is actually a cut of every transaction. And the way I look at it is that if inflation is going to happen, if money supply is going to increase, right? They are just like a natural hedge against the money deflation or inflation or whatever you call it, right? So I feel that being part of the financial system is going to be incredibly important. And I think I absolutely agree. That's something that is very good. And I think Square as well. People transfer money. It kind of works the same way. So fintech definitely is going to be a game changer, I think, in the next few years.
Kelvin, did you see the news this morning from Square? They just bought, I think, $50 million worth of, I think it was Bitcoin, right?
Really?
Yeah,
wow.
I heard that.
Yeah.
Okay.
The interesting thing about it is, Stephen, I think that one of the words that comes to my mind is hidden. And although I'm not choosing to participate in a particular market, I am being forced to be a participant in the market through these hidden exchanges. So to some extent, while I will be a part of that TAM ultimately, because I don't know it, okay, that's a fascinating study, I think, when you look at it, more strategically, is you're going to be a participant and you don't even know that you want it, and you can't opt out. And so it's kind of, I like that idea. Well, it's just kind of one of those things. It's
a lot of competition too, though. I mean, that's the thing to consider, right? I mean, you have obviously global potential, global TAM potential could touch everyone in every country. But again, your competition is Square on one end, traditional banks on the other end, et cetera, everything in between. And even if you're in a small village, in Africa, you're maybe paying with cash or something like that. Well, the shop owner who's doing the transaction might have, or will likely have, kind of electronic things going behind the scenes that might be affected. And so when you have that massive potential competition, that's when you have to be careful. But look, I don't know if you guys have followed these Stripe guys, but they're amazing. And if you would have bought, and because the market's so big, they don't even need to dominate it, right? It's one of those where you can have 3, 4, 5, 6 different potential leaders, and then you've got different regionalizations and national, things like that. But look, what's one of the best investments, safest investments over the last 20, 30 years or so? It's a company like a MasterCard or a Visa or something like that. And I think Stripe is the next generation of that, quite frankly.
One of the other markets or areas of interest that I think has broad appeal, global reach and things of that type, has to do with the developing activity of food safety. I think that when you look into this, somebody mentioned Kroger earlier, and of course they have a big deal. Walmart, every time that one of these companies has a recall because of some salmonella issue or whatever, the heightened interest by the broad population is to assure more and more security in and around the way in which they acquire food. And I think, again, that's a developing area. I've seen it happening over time. It's become part of the ESG investing community as people begin to recognize how they want to be safe and secure. So some of these things I think are building up. They are being promoted, through all kinds of fear-based news reporting, whether or not that's good or bad or whatever. But it is there, and of course, fear drives an awful lot of investment opportunity. But again, I think food safety and food-related activities are a large multinational interest, and it potentially could lead to a very, very large opportunities. Again, going back to the TAMs are very, very, very big.
Yeah, absolutely. And international in nature too. Kelvin?
Yeah, I think I would like to add on the part about fintech as well, because if you guys are aware, I think the next few weeks, Ant Finance, right, is going to go for IPO as well. Alibaba's payment arm as well. And you look at WeChat, these are all like super platforms that have embedded, I mean, they are their own processor, they are their own gateway as well. I think it's very, very interesting. Another area that I'm looking at specifically regarding fintech as well, I believe are e-wallets, right? Because at the end of the day, when you try to build an e-wallet, I guess it's very, very competitive. Like, how are you going to acquire your costs, right? And some e-wallets, they go bust because they just couldn't compete on the marketing front, right? How do you acquire customers at a low cost? And today, I think a lot of platforms started to realize that, hey, since I'm actually doing e-commerce, I'm actually acquiring my customers as well. Why not I offer my own payment solutions? And guess what? At the back end, I still do believe that they need a processor, right? If you look at Shopify, they are still not their own processor yet. I still believe they are using Stripe or something like that. And again, if you look at Stripe, the way it's being architect, right, built from ground up, it's actually a highly programmable kind of coding, right? So you have a lot of easy APIs that can connect with a lot of different use cases. So which is why I think it's very interesting. And I think over time, when we talk about e-wallets, I do think that over time, it will become a normal infrastructure and a utility of a consumer spending habits. And I think over time, e-wallets will converge to either one or two players, because at the end of the day, if you really look at the apps that you have on your phone, maybe in Asia case, right, we have Lazada, we have Shopee, but do I really need two apps, right? At the end of the day, do I want to deal with two apps? At the end of the day, I will converge. So I do feel that the industry is really, really big, but at the end of the day, people will still converge with one. Because if you look at Square, right, I think the Cash App grew actually much faster than PayPal's offering. I think it's Venmo, right? But correct me if I'm not wrong, because I think Cash is actually growing faster. And I think eventually consumers just prefer that convenience. So it's either one or two players remaining and the rest will just die off naturally.
I have a question I wanted to pose to all of you in regards to TAM and looking at sectors and industries that, because what I've loved so far about our panel is that we're really talking about a lot of sectors and industries that not necessarily fully matured, but are maturing at a pace that's very quick and going global at a much faster pace than I think any of us could possibly compute, which is I think where the true value lies. But a lot of problems that I see, in the FinTwit community, and a lot of investors might get caught in the trap of, hey, this industry is coming, or this market this is going to be amazing. This is going to be huge. This is what's going to now completely take over an existing industry or be a new industry. So what are some of the things that you're seeing on that front that maybe investors should maybe be a little bit wary of, saying, hey, this looks interesting. There's already a quote unquote established market, but maybe they're too early right now, or you might want to wait for it to mature a little bit more.
I think that, you go back to what Stephen said earlier about platform. I think in the value, because what you're asking is how do VCs find the right players? Okay, early on. It's because, in my opinion, it's because they have more data on cultural trends, broad trends, things that are out there that are unexposed to most people. But they're actually doing the due diligence to see where the strategic trends lie. And again, going back to what we talked about already, and I do think that most investors don't have that potential They can't buy a report from Gartner, or they can't hire McKinsey to do something to tell them what's going on. I think when you get right down to it, you have to go back and look at how do you find the early differentiators that will create a trend rather than looking for the trend. Because if you're looking for the trend, you're already too late, in my opinion. Okay.
Good
So I said earlier that, platforms, integration, systems, things of that type are what I look for when gauging your question. Okay. I mean, when I'm investing, most of those decisions about strategy have already been incorporated in the business plan. So I'm getting there late, I think. So again, I mean, maybe there are ways that I don't know how the private investor or the singular investor or even some of the family office guys can indeed go well upstream to get to the point where they see the germ, they see the idea, and they recognize that that's the best thing since sliced bread. Okay, and get in very, very, very early. And I think you're asking a very, very difficult question, Bobby. I think it's a very hard thing to get ahead of.
I throw screwballs every once in a while,
Yeah, I don't have the answer to that, so I'm not even going to attempt it. But I just wanted to mention, to Kevin's point, look, fundamentally, the demographics in different countries and different potential markets are something that I would look at. And I know Kelvin's with his interest in C, which I actually own a tiny amount as well, and probably will for a long, long time. Why not? Because its reinvestment opportunities are massive. But you look at the demographics for, let's just say something like online gaming, right? We're heading in the right direction. And when you look at certain countries in Asia specifically, that just the average age in that country is lower. Here, when you look at, say, Europe, and the reproduction rate is below replacement value, and they're not very strong on immigration, on allowing, immigrants in, the place where you want to invest over the next 20, 30, 40 years is a growing population and a younger age on average. And that's a country like in Indonesia or something along those lines, and other countries in Southeast Asia. I mean, Kelvin's more the expert here in that area, of course, but there are some specific companies here that we in the US can have access to, and C's one of them.
There's a guy who's been writing about demographics forever. I'm trying to figure the name out, Harry something or Henry something. He writes books on demographics, and it's exactly what it's been writing over the last 20 years. For example, let's pick Vietnam just as an example. The population after the war was decimated, and now they are probably one of those areas that you mentioned. Indonesia is the same thing, where the population is very, very young. They're very well connected. I mean, they're international in many, many cases. So yes, indeed, I agree with you on that the demographics are difficult. On the same hand, is that the demographics of Japan, for example, is getting, I don't know what the average age is. Let's sit down and say it's 48 versus 24 in Indonesia. The markets are different. You're going after healthcare. You're going after different markets where the TAM is based upon the demographics of being older. So I think and I agree with demographics. I've been reading this guy. I have to go find out who the hell it is. I'll get back at you later on it. But I fully agree that demographics, if you look at it, if you're looking for early trending activities, that's a place to start.
Yeah, I mean, to what I understand, I mean, if you look at, there's always the 5 stages of technology adoption, right? And I kind of think also product adoption as well. Your innovators, your early adopters, early majority, and I think towards the end is your I think late majority, right? And I do remember reading a book. It's called Crossing the Chasm, right? It's like this tipping point where now this thing gets fully adopted. To be really honest, I do not have an exact answer to that. But I do think that maybe from the country where I'm living in, maybe if you look at Singapore government, right, or maybe if you look at any governments that are more forward thinking, right, I think the moment that a certain product, I mean, I'm talking about software components, if it's being adopted by the government, and government tends to have quite a long selection process, they validate the product to see whether it's good or not. I think at the end of the day, if if government starts to adopt all these certain technologies, services, I do believe that, we can no longer say that this is just something that is hot for the moment, but it's something that will last and persist for a long time. And maybe I think I do feel just being observant around you, like just starting to see what people are consuming, what are they talking about as well. And I think one point as well is I think something very easy. It's something that's so simple that I think we tend to neglect it, and we tend to say that we tend to like ignore these tools, right? Like we can use alternate data like Google Trends. I think that's one of it. Use a Social Blade. You can see the website rankings. And I do feel that right now, who are actually the early adopters of this era? I always believe it's the young ones, right? So where do the young people actually spend their time on? Like TikTok, right? So I think on TikTok, there are some websites that actually track the kind of content, the hashtags as well on Instagram. So these are like hacks that you can do that is so simple, but sometimes we tend to forget about it.
Kevin, do you have a TikTok?
Yes, but it's embarrassing. I don't.
I know you do. Yeah, what do you post up?
Are you kidding
Kelvin?
me? Look how
no on Kevin, yes on Kelvin.
I just deleted mine.
It's for research. It's for research.
By the way, Stephen, the guy's name is Harry S. Dent. He's been writing about demographics forever, and the guy is either considered to be crazy or well beyond everybody else.
Yes, absolutely. And, so, I mean, to Kelvin, absolutely, agree with you there. And, I think going to the point that Kevin mentioned too, is look, there is still niches in areas. If you're going to, if you're going to look at TAM specifically, especially kind of geographically, then you want the largest, youngest growing demographic. That's not necessarily the best area to invest in, though. That's a good place to start looking for companies that have 101 bagger potential. That's Steve Kiel trademarked 101 bagger potential. But that's not necessarily the best way to have a lowest risk investment. And to Kevin's point about a company with declining demographics, probably aging population, there could be an opportunity over the next 3 to 5 to 10 years that a particular player could come in, whether it's healthcare or nursing homes or something like that, could address that market, that it just would not attract as much competition because the venture capital doesn't want to get into it because it has a 5 or 10 year lifespan, right? And those could be some great investment opportunities because there could be massive cash flow, limited competition, even though the TAM might be high for a short amount of time, but isn't high over the next 20 years, but it might be high over the next 10 years. That's a great place to look.
Let me just jump in and offer an interesting perspective on demographics. I'm in a certain demographic, as you can tell. And one of the areas that is of particular interest to me is prostate cures, okay? Don't laugh, it's there. Everybody's ultimately gonna have to deal with it, right? I mean, I don't give a shit right now about you young guys, but us old guys have to be very, very considered about what's going on. And I forget what the numbers are. 40, 50% of men are going to be subjected to some sort of prostate issues. So again, when we're looking at demographics, and I agree entirely that Kelvin said that young people drive particular markets and new innovation and things of that type. But other demographics actually do drive opportunities and things of that type. I mean, again, the funny thing, I did some research on breast cancer, and I want to see how broadly it was distributed among women and whether or not it was decided to decline after a particular age. I found some great data, and it was very, very informative. But one of the things that was more informative was it showed the rate of breast cancer, globally, and there was a much bigger curve above it. It was like this and that, it's like, and it was prostate. And so to some extent, it's the unknown, unspoken area of healthcare because guys just don't even want to talk about it. However, it's there. So anybody who comes up with a healthcare cure or healthcare therapeutic for prostate is also going to be in a great demographic. So again, I don't think we should be isolating opportunity to one group or another. They just all offer opportunity. And again, I think that prostate is something that is indeed not just subject to US, it is global. And again, most cancers are. So anybody who's chasing those opportunities, I think, has an interesting TAM available to them, based upon the demographic.
That's true. And how are you going to make that payment? Right? You've got several payments. So if you're getting treatment for, say, prostate cancer or something in India, right? You're going to pay the doctor, you're going to pay the insurance.
It's going to all be free. All be free.
You got 5 different transactions there for one treatment.
Steven, Kevin's going to pay by cash.
I have it in my wallet. I have it right here. Watch it.
He's got his e-wallet. No, hold on. He's going to use his e-wallet to make the 4 or 5 transactions for the.
Kevin's paying with Bitcoin.
Yeah, I own a lot of it. Yeah, I own a ton of it. I have it right next to gold.
Yeah, bring in the block of gold and then like chip a piece off for it, and you pay with that.
Yeah, is there a Stripe solution for paying in physical gold? I mean, come on, let's go. They're missing a huge market there.
Hey, they'll come up with something. Those guys are smart.
Yeah, that's for sure. So I want to close. I want to close out this panel with the second part of this question, because I don't want to spend too much time on it, because I feel like most of these sectors and industries are going to be mostly obvious. So for each of you, what's one sector or industry that you're either avoiding or you noticed is suffering right now, and it's really tough to see, the roadmap for them getting back to where maybe they used to be?
Well, I avoid what I don't know. I avoid mining and exploration, and I also avoid drugs because it's a binary coin flip on any sort of investment. So that's just a general direction. I think there is opportunity in many, many cases where I do think the restaurants are going to come back. I do think that gaming is going to come back, in-person gaming. I think that there are many, many things that people culturally will still desire. And again, that's probably talking from my demographic location. But again, it's one of those things where I think that much of this is going to be temporary now, and I think that some of it's going to be permanent. Do you want to invest in REITs, for example? That's a big crapshoot as far as I'm concerned. Okay, you don't know what the population is going to be doing and what companies are going to be doing. So again, there's a lot of. It's kind of funny. The word uncertainty was, I think, the word that started in number 1 from the very, very, very beginning of all these conversations, and it's still there. It's still highly present and highly influencing the nature of short-term decision making. Yeah. Okay, and I think that long-term decision making is probably the thing that I kind of trying to see if I can understand better.
I would argue even in healthy markets, uncertainty is definitely going to be that invisible cloak around every one of these conversations. Because if we were all certain about whatever it is out there, I think we'd have all of our own islands right now, right? I mean, so Stephen, what are your thoughts on the topic?
Yeah, I mean, I think when you have to look at industries here that will have long-term structural changes based on what's occurred here in the last 6 months with COVID, because these short-term ramifications, we talked earlier, there are some companies that will be able to grow and thrive and benefit. But then on the entire different spectrum, there are companies that were kind of heavily indebted and their demand decreased. They're maybe in person, did not have a capability kind of online, that were crushed in the short term and will also potentially be crushed, not just a cyclical, but a structural negative change. And I think when you look at some of these retailers, we've had some bankruptcies primarily because of debt, primarily because of high rent expenses, and that don't have an online presence. That, it's like, can some of these brands even come back? Some have obviously already declared bankruptcy. There's going to be a whole nother mess of them on the table in the next year. And that's an area that I would really, really want to be careful about, because again, TAM is smaller and decreasing. The demographics of some of these old time brands that have not progressed are not in our favor also. And then some of them that are heavy in certain areas where the population has been leaving. And I'm thinking about New York specifically. It's going to be tough. And there's always little nuggets and winners and niches in here. But if you're looking at an industry where there's going to be a higher percentage of potential winners, I would stay away from brick and mortar retail.
Kelvin? Yeah, I was just thinking along the same lines. Stephen, really, I think because I've witnessed it in Singapore as well. Like if you look at department stores, I mean the value add is really nothing but just giving a one-stop shop for all the different brands, and they do ridiculous markups, right? So if those brands, you can buy it online, and at the end of the day, if you as a consumer, it's all about seeking that value proposition. When it's not there, then where do you go? You go online, right? So I haven't really gave a deep thought about like what are industries that I would avoid, but I just generally avoid industries that when you have a lot of aggressive players inside, trying to get a piece of your business, and when it's so, I mean, competition is good, right? But when you have too much competition, you just think about how can you win in that industry. I mean, at the end of the day, competition is good to an extent, but at the end of the day, if you can't capture the profits, right, that you for the value that you deliver, then that's going to be quite painful. I mean, one of the examples, of course, is like what Warren Buffett said, right? In the past, I think in US, there's a lot of airlines that are competing among each other, and they start to consolidate and they start competing lesser. So that's the things I look at, but maybe just another perspective which could be a bit extreme, but maybe a few years down from now, then I will start to evaluate whether this is really extreme. It's really, I think, in any businesses that I buy today, I would really try to avoid businesses that are selling a physical product, right? So you look at, I mean, let's talk about finance again, right? Contactless payments, it's all digital. You talk about e-commerce as well. They're delivering digital services. Not only in a capital efficiency basis, right? It's lighter. The reinvestment rate is way higher. I believe that's the way things are going to progress. And I think with COVID-19, a lot of players have started to innovate a lot to see what are the kind of solutions that can deliver digitally. And I think one of it is really about signatures, right? Last time you just pay someone to deliver documents right across New York or whatever, but now you can use DocuSign, right? So I feel that digital payments have created tremendous value add that is really hard to just go back. So there are some industries that are permanently being disrupted because of newer solutions that we see today.
Very good. Any final thoughts on this topic? I mean, as I said at the beginning, this is something that we could probably go on forever and start going down little rabbit holes of, I mean, I got so many notes down here. I figured a great way to end this is maybe just kind of give our overall criteria when it comes to then looking at some of these sectors and industries that be uniquely positioned to have that high TAM, ability to grow revenues, GPM and OPM. Some of the things that have been brought up is that companies or industries that are able to be global, companies and industries that are able to help boost productivity. Stuff that what Stephen was saying is, and this isn't necessarily a trend or a theme, but just consumer staples in general. That's just always something that will be there. Something that Kevin also said is software, anything, sectors and industries that are able to just take what they do and create some sort of extra productivity solution, whether it's a brick and mortar or whatever that they're doing, taking advantage of computerized model or computing power. I think that, and then of course systems rather than the parts, integration packaged into a system. I think these are some great themes that as an investor, if you're listening to this and you want to look at different sectors and industries, it'd be great if there was companies out there, sectors and industries that hit every one of these boxes, but I would argue if they hit a few of these, that might also be a good place to start if you're looking, for the longer term. So any final takes on anything that I just said that you want to add to that?
Yeah, the only thing I would say there is, look, we're coming from the perspective as an investor. And so if there is an industry with a very large TAM, but also it attracts a ton of competition and innovative competition, that's a tough place to be as an investor. I'm looking for monopolies, duopolies, oligopolies, where there's two or three maybe major players and they're going to be around. You need that predictability over the next 10, 20, 30 years. I think that's the place to have to really look at as an investor with all of those TAM related, high TAM related items that you just referenced, but also for some reason there can only be 3 participants. I'd love to be in that area, and that's what I look for as an investor.
I also forgot to mention, we had a big conversation about demographics. It's a great place to look at, places with growing population and I guess an average population age that's on the relatively young side. We all can have different definitions of what that means, of course, but I think that was a great point that we brought up as well. So, Kelvin.
Yeah, let me just say that you can go through all of this quant type of stuff and trying to determine how you want to evaluate company and what are the important things and what are the numbers that you want to be able to be looking at and where do you want this thing to go in the future. But one of the things that's really most interesting to me is that one has to do a lot of self-evaluation to find out what the investor's emotion is like. Why are you going to choose this? Are your criteria correct? Okay. And I would argue that your criteria are somewhat correct, but they're somewhat wrong too. You don't have enough information. And so you're making a lot of personal decisions based upon some emotion that you cannot quantify. And I think that's kind of one of those lost pieces of investing that some people really need to kind of evaluate. I mean, again, it's as I said, I know what I don't want to invest in. Will my emotions impact what I will invest in? That's the other part. That's another discussion.
Yeah. So for me, it's really simple. I still remember reading a book by Peter Thiel. So I think he's a co-founder of PayPal together with Elon Musk. He wrote a book called 0 to 1. And if I still get it right, it says that the most valuable businesses of the coming decades will be built by entrepreneurs who seek to empower people rather than to make them obsolete, right? So again, I think this point is so relevant because at the end of the day, if you're trying to compete and just kill everyone out, then at the end of the day, the war is going to be very, very long, right? But anyway, still talking about the picks and shovels, right? Again, I think why I like fintech a lot, I like software a lot, is that they empower businesses, right? And how many businesses are there in the world? They empower consumers to live their lives better. So I always think about products and services that will empower businesses or people rather than just competing with them head on. So I guess to that point, I mean, since we are always talking about fintech, I think Stripe is actually an empowerment too. The reason why I think Stripe is great because I actually host certain content on Teachable, right? And when I want to have payment processing flexibility, it's very tough. But if you use Stripe, you could code it in your own way. Would that be better? Would that be a better solution for a lot of business owners? Would they want this solution? Of course, yes, right? So at the end of the day, buy into businesses that empower other people instead of competing with them. And I think that's also the same strategy that Microsoft is using right now. They are partnering with people instead of competing and killing them off.
I think that's a great way to end it. That's a perfect bow. I love that. All right, Kelvin, where can our audience, whoever's listening, watching, where can they go and find more information about you?
Well, you can find me on Twitter at Slingshot Cat.
At Slingshot Cat.
Yeah, that's all.
There we go. All right. And Kevin.
I had to unmute, sorry. Oh,
No,
I actually can't be found. I hide just to make sure that I don't get too much exposure. But as you've said, Bobby, I have my presence is in Twitter, where my account is The Good Prick. And what I do is that I don't post much. But when I do, it's mostly skeptical because my attitude is get it right, and just look, come on, it's I don't know, it's just stay focused.
I like that. Well, look, for those who don't know, also Kevin is a very talented photographer as well. So we're all hoping that he starts his own Instagram soon. That's next. We're gonna get him on an Instagram and posting his photos as well because they're.
You don't want to name your Instagram account The Good Prick though and post photos.
I don't know. I mean, I don't do that. I'm so well spread across social media that everybody knows me, of course. Hey, thanks for that, Bobby, too, by the way. Thank you.
Oh, of course. I love your photos. All right. And Stephen, where can everybody go and follow you?
Yeah, well, I mean, just to put a capstone on Kevin's Twitter account, The Good Prick, last time I looked at it, I think I had 288 followers. It clearly demands at least twice that.
So true.
Just so that at a stand-up dining group party or a beer bash, you can sit down and say, well, one of the guys that I follow and the thing is The Good Prick. And of course, that's going to get a few jokes. And but so it originated. The whole thing originated at a MicroCapClub beer bash, where the whole conversation was just about being skeptical and offering a good prick perspective. What are you doing that for?
Can we get them to 300? Can we get 12 followers?
Yeah, just 12. Let's get to 300, and then we'll get and then we'll get to 350, and then we'll get to 4, and then we'll
slow down. The TAM on Kevin's Twitter account is relatively low. I wouldn't want to invest in it, but
it's bad.
I think we need a challenge. If we hit 500 by year end, he has to create a TikTok account and Instagram account. That would have some kick.
That's challenge.
I like that.
I'll think one up.
Okay, so Kevin, here's the thing, and then I'll give my information and we can step off here. But here's the challenge, just for any listener here. If we could give him a sympathy follow, he's at 288 right now. If we can get him to 500 by, let's give it December 1. So he's got 2 months here. Yep. Get to 500 from 288. Kevin agrees to create a TikTok channel, and Kelvin and I get to suggest a song for Kevin to dance to.
Awesome.
That he will then have to post on his Twitter account.
Which he has to post both on TikTok, Twitter, and potentially at that point, I mean, Kevin's going to go worldwide and have the Instagram account too.
And we'll help him. Don't worry.
Am I going to be on a karaoke machine too?
No. We'll show you. Don't worry, Kevin. Kelvin and I will give you a couple examples, but it might be a little bit different than you're expecting. I'd say that. But this is the thing. Kevin now is going to be hoping that TikTok gets banned.
Oh yeah.
I'm looking forward to this. 288 follows. The good prick. Let's get him up to 500 by December 1st. Or whenever date it hits 500, that's when this has to go through. Kevin is agreeing to this deal right now because he loves gambling. He loves that kind of thing. So he's agreeing to this, and Kelvin and I get to suggest a song. I've got a couple in mind since I joined TikTok in the beginning of COVID as well.
I'm thinking at the beginning of when that happens, at the beginning of the following episode of the Investors Roundtable, we'll broadcast the video too as well. We'll make sure that gets on there.
Absolutely. All right.
100% supporting that. I'm very, very confident that I can get to 500, singularly with Stephen's support. If Stephen just posts on his Twitter account, just the idea that this is important to Kevin, because otherwise, he could pass on without knowing how many people think he's very, very interesting.
You're making assumptions there, though, that your followers are going to think you're interesting. I
have nothing to write anyway.
No, there's a lot of good stuff on there. Recommended follow for sure. And love Kevin. Love the idea of him dancing to a Megan Thee Stallion song, for those who know. All right, you can find me at on Twitter, Stephen_Kiel. It's Kiel. You can also find me at Arquitos.com, my fund, and willowoakfunds.com as well. And I'll be pumping Kevin's account here for the next few weeks. So apologies to my followers for that.
Let's do it. All right, gentlemen. Thank you for joining me today. This was a lot of fun, and I look forward to the next one. All right.
Thanks Bobby.
Guys.
See you guys.